There's a competitor out here in the stock trading blockchain space. Algorand was first to the punch on this one, but it fell flat for a variety of different reasons. I had a chance to try it. It was weird. Securitize didn't really do what it was supposed to do, but I learned about Algorand and Securitize through Exodus, and Exodus has brought me more information because they're planning on using Superstate to do more trading of their stocks. And Superstate is going to bring stock trading directly to the Solana blockchain, and they're doing it via a transfer agent. Now, I hadn't heard about this, and to me, it seems like this, while not a direct competitor to Bermudo, seems like it's going to definitely be playing in the same sandbox or swimming in the same pool, because as soon as you have the ACDCs from Bermudo, it starts to look more like stock trading because the cat tokens on Chia will then trade like stocks. So this is definitely where the entire world is going. We are going to see tokenized stock trading as one of the normative actions that will be the use case for blockchains in the next 5 years. And it's happening right now with Superstate's opening bell. Exodus plans on allowing their stock to be traded on Solana using this technology. And I'm a little surprised that I haven't heard in any of the context of the discussions around Bermudo that this was even on their radar. This was actually announced in May and likely was something that they could have known about or did know about, but I haven't heard them talk about it. So here we go. Let's put it on everybody's radar. If you weren't watching Exodus, you weren't watching their stock, you weren't watching their announcements, you might have missed it. So here it is, Superstate. And the technology is called Opening Bell. I'll get the link on the screen. Curious to hear your thoughts, Lucas. What are you thinking about with stock trading of Exodus?
Yeah, well, let's throw a couple more in there into the companies and the blockchains that are looking into or are joining this burgeoning wave of tokenized stocks. One we talked about before, tZero, or I'm sorry, not tZero, tZero.
tZero, yep.
And I don't know if you've seen anything from tZero. They seem to be very quiet. I've kept
they've been announcing stuff, so you'd have to follow their X account and kind of keep up with what's going on. The thing about these things is, I don't know, there's a lot of splash on the beginning of it, and there hasn't been a lot of follow through. That, I think, has been the du jour of these stock things. Is it's not catching on. It's not the kind of thing that people are chasing after, and so all of the tZero announcements just kind of are in the noise and in the background because it's not really happening yet.
And what about Robinhood? Have you been hearing anything from Robinhood?
Whether they're tokenizing their stock or whether they're using some of these platforms.
I'm not sure which they're doing, but I've heard advertisements. I've seen advertisements from Robinhood that are talking about the tokenization of stocks. So I'm not sure if they're coming up with their own platform or if they're going to be using another one of these companies, somebody with some blockchain expertise, for jumping into that fray. But we've both heard it. I both heard it from Robinhood, and they have a very large customer base. And we also heard. I'm trying to think of which. It was the SEC. One of the SEC commissioners put out a letter. Maybe it was published from a talk recently. I don't know if you remember that letter. I think it was Paul. I'd have to look it up. But he talked about the massive amount of interest that they had from everyone seemingly with regards to tokenization of stock. So it is blowing up. It is an oncoming wave that we're going to see. But to your question as to what I think about when I think about, say, Permuto as opposed to something that's on Solana or something that's on Algorand, is how attractive is the decentralization of Chia going to be to regulators?
I don't know that the decentralization is really the critical part of this. Honestly, I think one of the reasons why tokenized stock trading hasn't caught on with more aplomb is it's not really that much better, honestly. If you think about some of the things that occur in the world of crypto, you have all these custody issues, you have all these onboarding issues. You have to already be in that economy. You have to get money to the platform and into the blockchain particularly. I mean, there's a lot of barriers and friction. And then you think about, how do you just buy stocks normally? You just go to your broker and just click a button. I mean, it couldn't be any easier. You've got to do something that makes this better. One of the reasons I think Bermudo might have a real shot here is that they're doing something with stocks that is much more friction based. I mean, if you want to split the dividend off of a stock and purely go after that kind of a thing and try to, add some efficiencies into the market and allow people to do things in a way they haven't been able to do before, they might attract a certain amount of liquidity. They might be able to bring people to this that otherwise wouldn't have done this, because just tokenizing the stock doesn't make it any better. Maybe if it eliminates some of these market maker capacities that have distorted the market, this naked short selling and all the other kind of stuff that has happened with Overstock and GameStop and Tesla and the variety pantheon of other meme stocks that have gone through these bizarro scenarios where there's this massive amount of short interest in whatever is going on. Maybe if the stock trading shuts all that stuff down, we might have a more sane market. But you got to have the liquidity if you're not going to have market makers doing this kind of stuff, because in the world of stocks right now, you hit sell and it sells and there's no friction to it. In a blockchain tokenized world, you hit sell and that sell order could just sit there for a long time, because in the world of blockchains, I don't think you have those same market maker capacities. At least Trent and Gene have said this pretty concretely. Every time I've heard people ask, can you short? Can you do naked shorting? Can you do market maker type facilities? They keep saying no. So to me, that says they've got to bring a substantive amount of liquidity to the market, or it's going to be crickets chirping there.
Well, and so one, I do really like the innovation of splitting the dividend from the stock, and I think that's going to be attractive to both people who are looking to trade, but also companies who are looking to see some sort of action in maybe a world of slightly decreasing or more so decreasing dividends or stock prices. I think the and you're right to also point out the market makers and the distortion that they have brought to the world of stock trading. This is where I think decentralized solutions that Chia offers and that offers offer is a great advantage to anyone who's looking for a fair marketplace. But what I worry about is that those market makers and those companies and people who have benefited from opacity in what's going on during the trade or the settling of the stock are going to be seeking solutions that look like the old solutions. And when you say there's not that much of an innovation, when I look at a proof of stake, or when I think about a proof of stake solution like Algorand or Solana or Ethereum, then I see the control of the market maker, the market maker exerting control over that blockchain to be something that would be imminent. So
well, what I said was it's not necessarily a better mousetrap, and I'm looking at this purely from the perspective of the consumer experience, and just like if you're a retail investor or if you're a substantive institutional investor, there's been decades of development in tools, Bloomberg terminals. I mean, all this kind of stuff exists for regular stock trading, high frequency stock trading. there's established rules, and I mean there is a ton of things that have been done. If you think about what are we gaining by moving this to blockchain, you can list off some things that you get, and then you also start to remember that there's all this stuff like MEV that exists on Ethereum and Solana, and the vast majority of blockchains that exist out there, and that some of those things like MEV are not solvable on most chains, and it runs afoul of a bunch of rules that already exist. So there's just, it's not better from a consumer perspective. It has problems from a variety of rationales, and then you've got these liquidity issues. You have market maker facilities that aren't there. That's where I say it's not necessarily a better mousetrap. Like, there are some advantages, and those advantages may win out in the long term, but it's going to take a substantive amount of time before this has anywhere even near the parity of what we've got in the existing infrastructures.
Well, when you say there are rules, there are rules, and people look to subvert those rules. So if we think about better solutions, that is where the manipulation is. The points of manipulation are removed from the system. And this is where I think...
But only a few people care about that. People who are manipulating those rules certainly don't want them gone. They want them to stay. They're the more entrenched players with the money.
Well, this is where I think we have the conundrum of the success of Chia and the success of Permuto, because I think the decentralization of Chia and the offers that exist on Chia are better than trusting rules for rules to be written down and finding somebody to police those rules. But then I worry about I worry about the amount of disruption in the rule breaker and the rule maker system that we currently see as being the norm.
Well, the ones that are truly harmed in the existing infrastructure are mostly the companies themselves. And they're the ones that if they go through a period where their stock can be synthetically created and shorted, that is a detriment to the company. I don't think any company goes public and hopes that their stock gets shorted into oblivion. That's not the intended outcome, especially if you're trying to draw in investors who want to see the stock appreciate in value. Having it get shorted so that everybody loses their shirt, and then you have to play some kind of a game where maybe you hold back a lot of the money that you got from having the offering in the first place to buy back the stock when it starts to really get tanked. This is to the detriment of companies. And I think Patrick Byrne said it really well in the whole overstock debacle. And this also famously almost destroyed Tesla. If Tesla had gone slightly in a different direction, like, we wouldn't even be talking about this as a company. They would have just been bankrupted and ceased to exist, and we would be living in a substantively different world. So I think if there's going to be a demand and a drive for this, it's going to be in the companies that recognize that they have the potential to be significantly harmed by the existing infrastructure, and gravitating towards platforms that don't have those types of infrastructures that could be used against them.
Well, when I think about what you're describing there, the reality of what shorting and what people manipulating companies to fail has what has undergirded that phenomenon. I think that in large part that is because of the that has become an extraction mechanism from the taxpayers of the United States, and the draw that they have on the other countries and other peoples of the world. We're at 37 trillion, by the way, as of yesterday. Thank you, Thomas Massey, and your debt clock. But I don't know how long that system is going to exist as we have known it, say, since the early 2000s. So I don't know what the future holds, but there seems to be significant disruptions between both the liberal world order of global trade and the abuses of uh, uh, of entities who are greater than the rule makers, whether that be companies or financiers. Um, Trump seems to be very concerted in breaking that system, and he's taking a lot of flack for it for his tariffs. I like to call tariffs internal sanctions, or to think about it as internal sanctions, because we're so experienced with the results that sanctions on the other participators in the world economy, how that has affected the trade relationship between, say, us and Russia, or us, the United States and China, or any number of other countries, Venezuela. So this liberal free trade era, I think, is going by the wayside, and there are many participants and economists on the academic side or on the practical side, the private sector side and the government side, that are lamenting that. But I think that part of the move in that direction has to do with this addressing the industry's ability to avoid the rule makers, and that has been devastating to many countries around the world, not just the United States, who has gone away from manufacturing but only produces dollars. So,
well, it's a good point, because the rules as they've been written probably would have been sufficient to have normal functioning good markets. These have been subverted. This has been demonstrated time and again. And even the rules that were put in place after the 2008 financial collapse that were supposed to rein some of this in, we've seen evidence that didn't really work, and that fines have been levied, but the fines are far less than the than the winnings and earnings that were gained by companies that didn't follow the rules. So if blockchains can enforce the rules because they're codified, and we get this right by writing up the smart contracts correctly, then maybe we exist in a world where the blockchain actually enforces the rules and the computers enforce the rules, and we no longer have to deal with these situations where there are rule breakers. I don't know if you saw it, but Bermuda just got all of their audits completed, and they published the report on that. So things are still moving along in that direction as well. And that might be an interesting follow-up to the discussion today, is to look more deeply into what exactly has occurred with their audit. So there is an aspect of code as law, code enforcing these rules. That's going to take time too, to get that right and make sure that all of these smart contracts that get written are written correctly. If we've learned anything from watching CircuitDAO try to go live, these processes take time, and naturally, and should take years to get right. That doesn't bode well for the launch of Bermuda this summer.
Well, I hope that they and I think that Gene and CNI are prepared for that. But going back, you mentioned 2008 and what happened in 2008, because I want to maybe hone into what the advantage of the decentralization of Chia and Bermuda brings. Because in 2008, there's this narrative that people love to embrace and talk about, both free trade and capitalism. But the real engine of capitalism is to allow institutions who've made bad bets to fail. And when I talk about the problem of the system as it is today, all we have to do is go back to 2008 and say, did financial institutions and manufacturing corporations fail? No, they did not fail. They were backed up. They were backed up by the government, and yet they managed to maintain their autonomy and only pay back a fraction of the due that they owe to the federal government and the taxpayers of America in the wake of that, and furthermore, in the wake of it, have have acted and behaved more egregiously as after they've been giving um, the the understanding and the imprimatur of too big to fail. So when I look at the advantage of blockchain, and maybe this happens to some degree with proof of stake blockchains, but for them to begin to remove the middleman, so that they're to put maybe the decider into a machine or into code, so that we know, so that um, the failure aspect of capitalism is maintained. um, that is crucial for if we're going to see this game of capitalism to continue, then we've got to delink this reliance uh, on federal or government bailouts when they need it, and then autonomy and taking all of the gains for themselves whenever there's not when people don't understand that there's a catastrophe.
I did pull up the audit results of Permuto. So this is available. Put it in the show notes. I think as far as an update goes on where this is headed, I think the timeline for a summer launch has been missed. I would anticipate, as a result of this audit and knowing what we know about how these audit results can go, I'm going to give the bold prediction that we will not see Permuto launch in 2025. Also, given the kind of squishy dance that I heard Trent doing the other day when he was talking about timelines and when an IPO might occur, I think even a 2026 IPO for Chia is looking unlikely, given that I don't think Permuto is likely to launch still this year. So the most aggressive timeline I'd anticipate would be a Q1 2025 launch for Permuto, and that would mean maybe a 2027 IPO for Chia.
Oh, okay. You mean a Q1 2026?
Yeah, that's what I meant to say. Yeah, not Q1 2025. Q1 2026 for Permuto, 2027 IPO for Chia.
And that well may be. I think so much of it depends upon the political acceptance, and those political wheels moving. We also have midterms coming up in 2026. Maybe that will drive some of this turn, and bureaucracies like the SEC will begin to open the gates and issue some of the approvals for things that they have held waiting in bureaucratic turmoil in the meantime. So that might have some impact on it too. But you're
I'm
probably
just looking logistically at it. It's if this report is in hand, then even if everything was ready today, you probably still have a certain amount of it isn't 100% ready to go. We still have some things to get together. They didn't even make Q3. We're banging on the door of Q4 here in just a few days when the September rolls around. So it's October, November, December is Q4, and loath to launch anything into the market after Halloween. I mean, it's just there's nobody around. Everybody's on holidays and out doing stuff, Thanksgiving and Christmas. So the Q1 launch window is likely the new target given where it's at.
This is true. Do you know that when you mention that, it makes me think of FDR and Lincoln's Thanksgiving. By the way, you know FDR moved up Thanksgiving a month to give a bank holiday, so that people could accrue just a little bit more cash so they could buy those Christmas presents. and for a generation afterwards, some people would celebrate Thanksgiving on Lincoln's Thanksgiving, the last Thursday of the month of November. Some would celebrate on the 3rd, FDR's.
Well, it certainly seems to make more sense to have a feast closer to harvest than it would be to have a feast in November when you're starting to seriously take a hard look at how much food you might have for the winter.
Well, now you have the feast in October. The Thanksgiving is just
No, that's what I'm saying. Like to delay it to November, it's a modern contrivance.
right. Well, it's also so funny that we created a holiday out of fears about the winter, the winter doldrums, and then we had to reach back into American history to plaster some story over that, when reality it's about finance, banking, it's about the American economy.
That's a show. Like I feel like we're due for we did a Christmas episode once. Maybe we're due for a Thanksgiving episode where we shed some light on these historical underpinnings.
Oh, I would really enjoy that. We'll talk about Squanto and the Three Sisters. But just also bearing in mind the realities of the economy and politics and the effects that they have. We started this conversation with a question as to where these competitors are. We mentioned a couple of them, Superstate and tZero, but when I think about what could possibly be going on for them, I think that that they are probably having some of the same headaches with the bureaucratic machine. And that bureaucratic machine is not concerned about getting their products and this innovation out to the public more quickly. The bureaucratic machine operates with an eye towards politics and towards what is permissible to open up to the American economy. So
the other thing that I'd say that is an advantage that Opening Bells got, or launching onto one of these other chains where Circle and Tether already exist, is you have the ability to interface with a stable coin. I wonder to what extent Chia is going to be hampered by this, because we do not have an easy stable coin. We've got this wrapped USDC.B, whatever that exists from the bridge between Ethereum and Chia. That's it's a roundabout way to interact with the stable coin. I wonder if there's any discussion, or if this is one of the sticking points related to the launch of Bermuda, is that there's not a way to easily tie it to USD or a USD stable coin that is more native to the chain. I haven't heard much on that line, but given the way they're highlighting it in this article, makes me think that there may be something to this being a reason why this can actually work, and their discussions with the SEC.
I think that is a great question to put into our minds and to keep an eye out for, because the narrative of understanding and using crypto that is being constructed in the halls of Congress and in the American political system is really there's a fulcrum of these stable coins. And we saw that recently with the Stable Genius Act. Even a year and a half ago, 2 years ago, we saw Paul Ryan, who's still a big mover in the Republican Party, talking and focusing on stable coins. So it was at that point that I thought, well, we're going to see maybe a window of adoption begin to open for crypto, and it is going to be it's going to be structured in the understanding of stable coins and what they bring. But also, if we think back to what that Stablecoin Genius Act did, it it was laying out those which are acceptable, and those stable coins which are acceptable are those that are stable coins pinned to the dollar. So we might have to see that in Chia, and we might see that soon. That might be something that's being worked on behind the curtain. So something to keep an eye out for. I don't have any other deep thoughts about these tokenized stocks and coming out. I don't know if you have, but that now you've got me thinking about stablecoin aspect, and my mind is wandering off as to what might be happening there.
That's all I had. I think it's an interesting part of the conversation, tying the two things together, that we have the audit report coming out of the smart contracts associated with Permuto, and that there's definitely a competitive landscape that needs to be considered with respect to this whole idea of trading stocks. I think that there is an advantage to what Permuto is doing with the novelty of being able to have dividend certificates. I think that there's an entire world that is retiring off of dividends that really will chase this, and it could be extremely attractive to a lot of people who want just the dividend certificates. They've got to bring the liquidity. I'm looking at a new target for launch. I'd be interested to hear if that gets refuted in any way as a result of this show. We usually don't make predictions, but I'm going to make a prediction on this one that the target for the launching of this thing is going to get shifted to Q1 2026 for a launch of Permuto, and that we won't see a Chia IPO for at least a year, because they've got to recognize some revenue and they got to have a couple quarters under their belt. And I just don't know that that's going to be possible in 2026 if we see a launch of Permuto then. So unfortunately, I think the Chia community is going to have to wait a bit longer, but I think the horizon for this stock trading thing, if it's the way that is envisioned by tZero and by Superstate with their opening bell product, I'm going to say that that's like a 5-year time horizon, because they got a lot of work to do if they don't bring something novel and something very different to the mix, like what Permuto is doing. But maybe they'll be able to chase Permuto after they lay all the groundwork and try to do something here. It might be Mev be damned, and they just flout the rules, and that advantage that Chia thinks they have might not play out the way that Chia had hoped. But hopefully they've got an advantage. But that's kind of all I've got for FOMO.
All right. Well, see you next time.
See you next time on FOMO.